to the Trading Market Technicals morning call video for Thursday, December the 12th. Markets did push lower again. Dow Jones down 129, NASDAQ down 56, S&P down 20, and a Russell down 18. Markets are starting to see signs of weakness. I've been saying that for the last couple of weeks, but more so in the internals. Now, obviously, price is king. Price is what pays. Markets can reverse at any given time, and then these internals can roll around. But this is something that we need to be aware of. Even if you're day trading, you want to know what's happening underneath the hood, so to speak. So let's dive right into it. I want to get into the indicators, and then we'll go into the chart segment. Really, nothing has changed, but I want to show you how they're starting to deteriorate even more. Here's a tick, end of day tick reading. So to me, as you can see, lower lows and lower highs. By the way, I'm showing you all of this. You've seen all of the indicators before, but I want to continue to show you how they're starting to break down here. Now, anything above zero or below zero, obviously, as you see, the market's been above zero. The tick's been above zero all of 2013 with these little blips lower, no big deal. As long as you get above it and hold. But here we're starting to make lower lows and lower highs. And now we're starting to break down, as you can see, boom. Now we're getting back low with this big candle lower. Now, do we break back up again? That is yet to be seen. Obviously, we are up ever so slightly in the E-mini S&P electronic session, up about 2 handles, but that could easily change between now and 9:30 today. But anyway, this is not a real good sign, something that I'd rather see up above for a continued resumption of the uptrend. But again, we are way overextended, and we are in dire need for a pullback, which is actually healthy. And remember, I mentioned a couple weeks back that I looked at the history, and 48 out of 60 Decembers we actually were up. However, there were 8 times that we were at all-time highs in December, which we did not get that Santa Claus rally. Now, that doesn't mean that we're not going to get it. It just means that we are overextended. And remember, if the ball starts to roll, a lot of these portfolio managers are definitely going to lock in their profits instead of start looking to defend going into 2014. So, got to keep an eye on that. And also, don't forget, we do have tax selling coming in towards the end of the year. All right, so that's the tick. Let me show you the McClellan oscillator, which I have not shown you in a couple of weeks because it really hasn't done anything all of November and into December. But one thing I have seen is the Bollinger Bands here are starting to pinch, meaning that there's energy building, and we're going to be looking for a push one way or the other. It doesn't tell you what direction, but if I'm looking at this, now this could hold and we can rally, but it looks like we might push lower, and there's plenty of room to the downside before we get any type of oversold reading. Okay, so there's the McClellan oscillator. New York Stock Exchange, new highs, new lows. As you can see here, barely holding above zero now, but making lower lows and lower highs. Not a good sign. That's another indication that the market is starting to break down here. New York Stock Exchange 52-week highs. As you can see, again, lower lows and lower highs. This has not broken back above all of November. I think one spot we had a little blip towards the end of November, but again came right back down again. Again, not a good sign here. So the sectors were moving where the stocks are really not moving. Okay, New York Stock Exchange new lows. This here, the good thing about it is that this actually stayed pretty much status quo, up only 13. Where the markets were down. Really, the Dow took it on the chin, but if you really, when I show you these sector charts, the NASDAQ really rolled over, more so the IWM and the transport. They were notable selling going on in that two sectors. So that's, with the two leaders taking it on the chin, that's something that you really got to keep an eye on. Okay, let's take a look at the VIX. And as you can see here with the VIX, we did break back up again. So fear starting to creep up into the market. Really not that much, not that bad, but something here that you got to keep an eye on, okay? Now let's take a look at the BKX. Healthy for a pullback here, but again, banks are starting to roll over. And then, of course, we have the semiconductor sector, two of the notable indexes here that you really want to see starting to pick up and rally here, but as you can see, we're way overbought here in our stochastics, MACDs, and RSI, and they are now starting to roll over and unwind their overbought reading, which is, again, a good sign. But when you have the two sectors like this, and then you have the leaders starting to roll over, that gives me a hint saying, maybe there's a little bit more downside here before we enter that Santa Claus so-called rally here. Okay, let's take a look at WTI. Now, On crude, I'll get a couple emails on it. We did get that death cross here, as you can see. Now we're just capping this 200-day. I could definitely see some higher prices in crude. I'd like to see a pullback though. I have no trade here. I'm looking for a pullback to the 95-ish, 96 area and start nibbling into a long position. Now, if we look at the bullish percent energy, as you can see, that is starting to break down, and that's what I don't like. I don't like to see this, and looking for a trade here. So again, if we can get back to the 34.5 area, maybe 50, 60 cents below, and then this USO can get back down to that 50, 55 percentile and start to move higher, then I would start looking to be a better buyer here, but not quite yet. We're making lower lows and lower highs in our RSI here, and we're starting to get a little bit oversold, which is a good sign. But I like to see one more big push lower and then start looking to resume the uptrend. Okay, let's take a look at the sectors. As you can see here, same thing with the US. So I just want to show it to you in a bigger picture. A lot going on, but again, a lot of information here. Bear flags. We had that big head and shoulders pattern that worked out real nice, and now we're going from low to high. We just caught that 50-day moving average, which coincide perfectly with the 200-day, and of course the 50-day moving average with that death cross. So a lot of resistance up above here. So it wouldn't surprise me if we try to catch that 8 again. That's where I start looking to nibble in, because you really nibble in with an exact amount of shares that you want to risk, and then of course your stops would be just below this little area here. Okay, so just keep an eye on it. GLD, I have no trade at the moment. You can short up here with the stops just above Tuesday's high, but I'd like to see a deeper retracement up and maybe catch that 50-day moving average. That's going to be the ideal spot for me to get short GLD. Okay, spiders, just to show you here, we broke that 20. Most of the indexes that we follow have broken the 20-day moving average. A lot of confluence area of support here at the 177.50. That's going to be the spot where I'm looking for some sort of a dead cat bounce into the spiders. And then let's see what happens here. Well, we did break in the minis. Now remember, we did break that 1797. The next support area, which was tested by about $1.50, is the 1774. Okay, 1774 is the next pretty much decent support area in the ES. If we lose that, then I think we get a deeper downside move to at least the 1750-ish area, okay? But I'm watching the 1774. We really need to break back above 1786 to 1790 to alleviate that bearish downside move from the previous day. So let's keep an eye on that as well, okay? You might want to write that down with the ES. Here's the diamonds. Broke lower here again, and now we're just kind of sitting on this cluster. You can see, though, the Bollinger Bands are starting to pinch here. So we're getting some energy building here in these sectors. Here is the transports. As you can see, really took it on the chin here. We lost the 20, and now I think the next area is going to be the 50-day moving average. And then let's see what we can reevaluate, and maybe we start to move higher again. Let me just get that right there. Okay, now let's go to IWMs. Same thing with the IWMs. It is now at its 50-day moving average. So usually one of the big moves up as well. It's quickly to move lower with profit taking coming out of this sector. Now this is telling you that risk trade is off. So we want to watch this as well to see if we get some speculative money starting to come back into the market. Okay, take a look at the XLF. Big move up. We had that bear flag I showed you yesterday, broke out of it, and now, to me, this is going to be the next area is 2095, and then a 50-day moving average, and then, of course, this uptrend line from 2012 lows. And we have Goldman Sachs. Goldman acted very, very well, and you can see the banks are acting well. I think the bank's going to be a great trade for 2014, at least for now. They're holding up well, and I like JP Morgan here as a trade. We have a nice little bull flag. Lower volume, and let's see if it can hold this gap area of support. Okay, if it does hold and it can stabilize a little bit and take out that base, then I'd be a better buyer here of JP Morgan. I would definitely lighten up the load though, unless you're writing vertical spreads in an options. I would just kind of hold back a little bit. I wouldn't take too much exposure overnight. And here's Apple. Again, Apple held up really well. But again, you're at these lofty areas here. A break below this 559. I think you're going to see at least the 20-day moving average in Apple. And lastly, here is the Qs breaking down off this uptrend channel. And again, going to probably challenge the 20-day moving average. So yesterday I mentioned I'm looking for some weakness early on. The weakness turned into an all-day event, and we did move lower. This morning, we are up a little bit. I'm thinking that the markets are going to push lower again, and then we would reevaluate possibly for some sort of a big move or at least a retracement rally back up to at least try to challenge the highs going into the next couple of weeks. As we get closer to the end of the, well, let's put it this way. If you get closer to the Christmas season, I do think that the markets are going to probably bounce. How far, how high, no one knows at the moment. We're still looking for, is this retracement rally, is this downside move over, or is there further downside to come? So that's really what we're analyzing. Right now, we have a short-term downtrend the last couple of days. Really meaningless, though. I haven't seen any fear in selling. All I'm seeing is that any bounces are being sold into, and that's basically by the portfolio managers, hedge fund guys, want to lock in some profits. So keep that in mind when you're trading, and let's see what happens the next couple of days. It's going to be very interesting. I actually think between now and end of next week, it's going to create some great opportunity, as well as even the last week of December. Usually quiet, but maybe not so. Let's keep an eye on things, see where it goes, and watch those indicators, guys. It's really important. Have a great day. We'll speak to you tomorrow. Take care.